Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Kevin Warsh makes his first appearance on the international stage, with the Fed chairman set to speak at the ECB's Sintra forum later today. But European policymakers tell Bloomberg the global inflation shock isn't over yet. Oil edges higher even as the US touts positive technical talks with Iran in Doha, with key issues including the management of the Strait of Hormuz still unresolved. And the US lifts export curbs on Anthropic's Fable AI model. Commerce Secretary Howard Lutnick says that the firm's agreed to work with the White House on standards for new models. Well, those are your headlines this morning. Welcome to Wednesday. Welcome to Q3. The S&P having just wrapped up its best quarter since 2020. But equities starting this quarter quietly, it has to be said. The MSCI Asia Pacific Index only up 0.2%, losing momentum after a two-day rally. Hong Kong, mind you, is on holiday today, but futures slightly weaker on both sides of the Atlantic as well. Flip cross asset, and we can take a look at oil. As I say, Brent is stronger by 0.3% at $73 a barrel, even after the US has reported positive talks in Doha with Iran. Traders monitoring the return of shipping through the Strait of Hormuz. And Goldman actually telling Bloomberg that the market's going to swing back to oversupply when the impact of the war fades and traffic recovers. In your bond space, the 10-year there at 4.46, steady as we look ahead to Kevin Warsh's first outing as Fed chairman beyond US shores, in Sintra, of course. And this is before focus turns to that US jobs report tomorrow. The dollar is gaining, up 0.1% on the Bloomberg Dollar Spot Index. And on the flip side there, you've got dollar yen at 162.73. Strategists now eyeing that 163 level and wondering just how weak a yen the finance ministry is going to tolerate before intervening. Now, let's have a look at what risk events are on the docket for today. At the top of the hour, we get the latest UK house price data from Nationwide, followed by at midday London time US ADP employment numbers. Already yesterday's data showing steady labour demand and consumer confidence edging higher. And then the highlight of the day, perhaps at 2 p.m. London time, we'll be hearing from the Fed's Kevin Warsh, the ECB's Christine Lagarde, the Bank of England's Andrew Bailey and the Bank of Canada's Tiff Macklem on a panel at Sintra. So lots on the agenda for today. Let's get you started. We begin with stocks in Asia having a mixed session after 2 days of gains. Let's go straight to Anthony Stevens for an update out of Hong Kong. Anthony, what's catching your eye this morning?
Yeah, the memory trade is getting a little bit crowded and complicated in Asia to start. The market is processing this huge expansion in capacity over in Korea, those massive capex plans from Samsung and Hynix. That's weighing on the memory trade across the region, but that obviously shows up most saliently in the Kospi, which came up really sharply off a pretty decent open. It's bounced around a lot. Again, another 5% intraday swing in Korea. That's becoming the new normal in Korea. It's a little bit more sedate in the rest of Asian tech. You see Taiwan is quite strong, Japan tech is quite strong, and that's because they have the semi-equipment makers and the semi-material makers and the passive components that the Koreans will be investing in. So that joins the Chinese and the US in this big AI capital expenditures cycle, which benefits the Japanese and the Taiwanese. So you're seeing that play out really aggressively in markets. China, for its part, has grinded higher all day, led by the financial sector for the first time in a very long time. And that's because there is some rotation out of the tech space in China. In China, we have two companies back to back saying that the expectations for profits are a little bit too elevated. Cambricon is the latest, saying that the chip material price hikes and surges that you've been seeing are going to impact margins. So that's something to watch on the margin of the tech trade as we get more advanced. Then we move into the FX space, which is very dispersed again in Asia. You see the won and the yen trading very similarly. They're both getting hammered against the dollar as they price this fiscal expansion and a reluctance to hike rates as soon as the market wants them to. So BOK and BOJ are both on watch for rate hikes, which they seem to be tentative about, and both governments are under watch for intervention intervention or verbal intervention kind of measures, as the Korean won, for example, is near the low end of the range of the last decade or so. The yen, of course, is in multi-decade lows. So that bears watching. Meanwhile, the Chinese yuan continues to be quite firm, following on from PMI numbers yesterday. So there's a real disparity on the FX side, and the tech trade is getting a lot more complex coming into your session, and that's probably why futures are pretty listless to start in Europe.
Okay, Anthony Stevens, thank you very much for that update. And let's go to the flip side of those weaker currencies in Asia. The dollar story, as I say, this morning, the Bloomberg Dollar Spot Index up about 0.1%. And this comes back to the Fed. Traders in the Fed funds market ramping up bets on what had been seen as an unlikely July rate hike from the Fed, with interest rate swaps now pricing more than a 1 in 3 chance of a move higher. Let's go to Mark Cranfield now from Bloomberg MLive. Morning, Mark. We are, of course, waiting to hear from Kevin Warsh in Sintra later on today. Are you expecting more hawkish signals?
Well, there's a bit of talk in the market among traders that what Mr. Warsh may talk about or try to emphasize is that maybe there's a need for an early interest rate hike from the Federal Reserve to prevent doing a whole series down the road. So maybe an insurance hike, something like the European Central Bank did. A lot of people thought that the European Central Bank acted a bit quickly by raising interest rates 25 basis points. Possibly that's what traders are thinking here in terms of the Federal Reserve, that Mr. Warsh will come in, try and get his credibility on the table to show people that he's very serious about reducing the inflation numbers, and by doing so, he goes for a small move early. That gets people on side. It buys him a bit of time, and then he doesn't need to follow up with aggressive hikes down the road. By then, possibly inflation numbers will start to come back down, those lower oil prices feeding into the market. So certainly any hints that he's willing to do such an insurance hike will be very closely watched at Sintra today. But it's not just him, of course. Bank of England's Bailey is there as well, and there's a lot of traders passing what he has to say, because the chances are that the Bank of England, they seem to be on hold for some time. But of course, that could all change if he interprets inflation as being a bit more sticky than where the market is seeing. So both of those people, the Bank of England and the Federal Reserve speakers, are very much in focus with what they have to say.
And Mark, of course, we're looking ahead to the US jobs numbers out tomorrow, but we've already had a bit of data stateside. So just tell us how all of that so far has shaped the outlook ahead.
Well, that's partly why traders were moving the dial a little bit in terms of rate hike expectations, because the JOLTS numbers are pretty strong overnight. That sets up the ADP numbers today, and then we've got the jobs report coming in tomorrow. So there's a whole series of situations around the employment sector which suggest that America is doing pretty well. We've seen other data as well. Michigan index as well was pretty strong. So the US economy seems to be firing along pretty well, and we can see it as well in the numbers that are coming out from companies in terms of profitability and the huge expansion in terms of buying data centers and all that kind of thing. So we can see that people aren't concerned about the strength of the US economy. It's just a question of whether is the labour market too tight? Is it getting overheated there? And does the Fed need to respond in that area? We've still got inflation numbers to come in a couple of weeks' time. So it's part of the picture. Certainly where we go in terms of employment is certainly a big one for the Fed. But they're probably, in the end, when push comes to shove, it's really those CPI data which will come up later in the month. That's what they're going to be most concerned about. They already have seen the PCE from last week at 4%. That's way too high. And they will need to have a lot of evidence that there's a chance for it to start to come down. Otherwise, we may well get that little hike, probably September or October. July is still a long shot, really. Traders are not convinced, but they're getting warmer to the idea that the Fed is going to move, and it will only be 1 or 2 meetings away.
Well, let's turn now to the European rate story. Mark, thank you for that. That's Bloomberg MLive's Mark Cranfield. We, of course, have also been hearing from the ECB at Sintra. Ollie Wren telling Bloomberg that the Iran war is stoking inflation while weighing on economic expansion as well. He's been speaking to Francine Lacroix in Sintra.
This energy shock has been clearly stagflationary, not like in the 1970s. That was a very deep stagflation, but its nature is of similar kind in the sense that at least in the short term, inflation has increased while growth outlook has weakened.
And as we say, the Fed Chairman Kevin Warsh will be speaking alongside his global peers this afternoon. So let's go straight to Sintra. We can speak to Francine Lacroix, who's covering the forum for us. Fran, we heard from Ren there. Has the mood in general been hawkish from the policymakers you've been speaking to? Good morning.
Good morning, Lizzie. Well, yesterday, a lot of the conversation was actually on AI and so longer term, what that means for labor and productivity. And then in our interviews with three central bank governors, of course, from the Eurozone, I think they were hawkish, at the margins. So they were probably cautious, saying if you look at the second round effects for inflation, when you look at the price of oil, the fact that it's come down, even gas prices, a touch lower since we had that memorandum of understanding, they still worry about the longer term prospects. Now, for me, what was extremely interesting is that they were all on the same page. I heard meeting by meeting, and we're data dependent countless of times. And so it's unclear whether we'll see something in July. There's, of course, an ECB meeting at the end of July, or whether they'll wait for September. No one really gave us any indication of what they were looking at. In fact, Olli Rehn, that spoke to us yesterday afternoon, was very cautious and almost not talking about interest rates because they want to give themselves quite a lot of leeway. We still have a lot of data in the next couple of weeks. But for me, what was interesting is that they really pushed back, all of them, like Christine Lagarde did the day before, that what they did in June, that hike in June, was not an insurance hike, that they saw the real data. And so the market is pricing in one more hike from here until the end of the year. They're also counting on the markets to do a lot of the tightening for them. And so they need to make sure that the market doesn't take a hike off the table, because they'll have to start over in terms of that work. So it's an interesting dynamic that we're seeing, but a lot of them were very cautious and not giving us an idea of the way they would vote in July or September.
OK, so cautious messaging. What have you got coming up today then? Lots more conversations to come.
Well, today, of course, is the big panel. Kevin Warsh was here yesterday. He arrived Monday night. Yesterday, he spent, this is a very informal meeting, so we saw him walk around, speak to a lot of the other governors. And that is, without a doubt, the big panel and the big event of the week. A lot of, when you talk to central bankers or economists here, look, there's a lot of questions about whether Chair Warsh is a hawk or a dove. I think we'll get clues in that policy panel later this afternoon. A lot of people also think that he's really been a politician. If you go back to his testimony, if you go back to what he said on, a couple of weeks ago, he gave very little clues. So is today the day where we find out what exactly he thinks on interest rates? He's also getting a little bit of good news on the inflation front, because there's some planned changes to how the Bureau of Economic Analysis calculates fees in the PCE price index that will take effect in September. So maybe, that will cut core PC inflation, making his life a little bit easier. And again, he also has to push back against a lot of people on the FOMC that want to hike just to prove to Donald Trump that they're independent. So all eyes on that panel a little bit later on, and he'll be joined, of course, by Christine Lagarde, the Canadian Central Bank Governor, and Andrew Bailey of the Bank of England.
OK, well, we look forward to all of your coverage. That's Bloomberg's Francine Lacroix. Thank you very much. And do stay with us right here on Bloomberg TV, because we'll be speaking to guests, including the Bundesbank president, also the governor of the South African Reserve Bank. So those conversations coming up with Fran later throughout the day. But still ahead, we'll get the latest on markets and a preview of that speech from Kevin Warsh at Sintra with Sabrina Khanniche, senior economist over at Pictet Asset Management. But first, lead US negotiators Jared Kushner and Steve Witkoff hold talks on a possible Iran war peace deal. That in Doha, and we'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. To the geopolitics now. The US says that negotiators Jared Kushner and Steve Witkoff had positive discussions with regional leaders in Doha on a deal with Iran. Oil is inching higher today as the two countries seek to ease tensions in the wake of recent clashes over the Strait of Hormuz. Let's get the latest now from the Middle East. We can speak to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. She joins us now. Abir, thank you for being with us. A rocky start, it seems, to the talks, but the US at least reporting progress. What's the latest on who's going to control the strait, the key thing for oil markets?
Good morning, Lizzie. That is a good question. And for the time being, the answer is we still don't know. But the talks, as you had mentioned in Doha, started at a rocky place, but ended up being positive. This is according to the American side. Both Steve Witkoff and Jared Kushner, President Trump's son-in-law, had attended those unofficial talks that Iran had a day earlier said that it will not participate in. And Qatar really downplayed the importance of these talks as well. But they happened yesterday. They ended up in a good place. Iran did say that either $12 billion of frozen assets will be unlocked or have already been unlocked, and those oil sanctions that it has been touting being lifted have also taken place. Again, this is according to the Iranian side. We don't know much from the American side. What we do know a little bit from the American side is this report by the Wall Street Journal, Lizzie, that said that President Trump had opted out of a military position in Iran. This is according to sources of the Wall Street Journal saying that he was briefed by his advisors, and he said that he doesn't actually mind if the negotiations go on beyond the deadline period set in August. And so that really gets to show you just how much the American side wants to get this deal, or the permanent deal, once the MOU negotiations are down the line, and that obviously includes the nuclear component that we've been talking about over the past few months. But when it comes to the other sticking point of the MOU, that is the Strait of Hormuz, Iran maintains that it wants to toll it. We spoke about that earlier in the week. It said that it will do that with or without the help of the other party that controls the other side of the Strait of Hormuz, that is Oman. Omani Sultan Haytham bin Tariq met with French counterpart Macron yesterday, or the day before yesterday, and they both agreed that it was a waterway that should not be controlled. It's a natural waterway that should not be held at the control of any country. Iran obviously opposes this and says it will start charging tolls once the 60-day negotiation period is over. That remains to be seen. The U.S. response to that remains to be seen. Marco Rubio, the Secretary of State of the United States, said the notion of tolling it is completely unacceptable. But when it comes to the actual talks that have happened, all we know is that they are headed towards a positive place. We're still monitoring movement in the Strait of Hormuz. Big banks, including Goldman Sachs and Morgan Stanley, actually say we might see a return to fundamentals, with oil prices, according to Morgan Stanley, averaging around $75 a barrel for the third quarter and the fourth quarter. Goldman Sachs also says an oversupply is set to hit markets later this year. So quite a reversal from the state of oil markets that we've been seeing since late February, Lizzie, and something to definitely keep an eye on for the time being.
Yeah, exactly. Morgan Stanley cutting its price forecast for the second time in about 2 weeks. And as you say, Samantha Dart of Goldman Sachs talking to us with that forecast for an oversupply potentially once we have a normalisation of flows through the Strait. Brent currently at $73 a barrel. Abir, thank you so much for the update. That's Bloomberg's Abir Abu Omar. She'll be back with Horizons at 5 a.m. London time tomorrow. Well, coming up on Daybreak Europe, Anthropic says that the US's restrictions on its most powerful AI models have now been lifted. We'll get you the details of how that came to be next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To tech now. Anthropic says that the US government has lifted restrictions on foreign access to its Fable 5 AI model after the Trump administration's safety concerns were resolved. Let's get more now with Neil Campling, Bloomberg's senior strategist. Morning, Neil. So where does this leave Anthropic's relationship with the Trump administration? And what did Anthropic actually do to get these export controls lifted?
Yeah, so it's good news. They are able now to allow this for use for customers. I think what we basically said is that there's extra cybersecurity safeguards in place now, which will get over the national security concerns that the government previously had. So they put in a new safeguard to make sure that fabled targets and blocks behavior that had allowed some users to bypass the securities before. So it's definitely good news that the lifting of the restrictions. And it also means that now we have an ability to really keep pace with China's AI development, because we've heard just in recent days that some of the Chinese AI models have been catching up with some of the US frontier models. So this should certainly enable Anthropic to continue its leadership that it has in the AI frontier space. So it's definitely good news for the tech industry and for coders.
Well, speaking of which, Anthropic's also releasing new software for scientists, Neil. How much of that is going to tread on the toes of drug discovery companies?
Yeah, it's a great question. It's certainly, I mean, it could be used to help the drug discovery companies accelerate time to market by being able to look through so many databases at once. The biggest kind of potential competitive threat actually comes to Google's DeepMind. It's been at the vanguard of AI for science for the last 10 years. And all of a sudden, overnight, DeepMind has gone from the leader and the most advanced model in this space to actually now playing catch up for the science industry. So this could be something that actually accelerates time to market for new drugs, and is certainly yet another example of Anthropic leading the charge for these new agentic AI models being applied to specific needs that we have in industries.
Interesting to see the likes of Schrödinger falling on the back of the news about Claude Science. Neil, thank you so much for that. That's Bloomberg's Neil Campling. Now, let's take you to some other top stories we're following for you this morning. The UK competition watchdog is consulting on new rules that could cut mobile app costs for consumers and for developers. The CMA wants Apple and Google to let app makers direct users to payment options outside their own app stores, a move aimed at reducing fees and boosting competition. Apple says that the plan, though, could undermine security and consumer protections, while Google says that it's already cut its fees. Elsewhere, in corporate news this morning, Nike shares are lower after hours, with a cautious demand outlook offsetting a fourth quarter earnings beat. CFO Matt Friend said that the sportswear company doesn't expect to see the consumer environment meaningfully improve over the next 6 months, and that its customers are under pressure around the world. Well, those are some of our top stories in the corporate world this morning. But coming up right here on Daybreak Europe, Kevin Warsh makes one of his first big international speeches at the ECB meeting in Sintra later. So we're going to look ahead to that with Sabrina Khanniche, senior economist over at Pictet Asset Management. That conversation coming up next as we look at futures pointing lower on both sides of the Atlantic this morning. Euro-dollar a touch weaker, and in your bond space, Treasury yields very steady across the curve. Good morning from London. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Kevin Warsh makes his first appearance on the international stage, with the Fed chairman set to speak at the ECB's Sintra forum later on today. But European policymakers tell Bloomberg that the global inflation shock isn't over yet. Meanwhile, oil edges higher even as the US touts positive technical talks with Iran in Doha, with key issues including the management of the Strait of Hormuz still unresolved. And the US lifts export curbs on Anthropic's Fable AI model. Commerce Secretary Howard Lutnick says that the firm has now agreed to work with the White House on standards the new models. Well, those are your headlines this morning. Welcome to Wednesday. If you are just joining us, 6:30 a.m. here in London. This is the picture in markets this morning. And we have equities starting Q3 pretty quietly. We are up 0.1% for Asian stocks after a two-day rally. Hong Kong, mind you, on holiday. And on both sides of the Atlantic, futures pointing slightly lower. But if we take a look at the cross-asset picture, interesting to see oil up 0.3% at $73 a barrel, even as the US reports these positive talks in Doha on a deal with Iran. Treasury's steady on the 10-year at 4.46. We're waiting, of course, for Fed Chairman Kevin Warsh to make his first outing beyond the US. And we are also looking ahead to the US jobs report tomorrow as well. The dollar is gaining on the expectation of Fed hikes. We're up 0.1%. And on the flip side, the yen there at 162.73, so still trading weaker. And strategists now looking at that 163 level, wondering what the finance ministry is going to tolerate before intervening. Will it tolerate a weaker currency than it did in 2024? That's what's happening in your markets. Let's take a look at the front pages this Wednesday morning. And we'll kick off with the Wall Street Journal today. So leading with the Supreme Court's latest decisions, you've got one ruling that could give President Trump alternative ways to pursue his immigration crackdown, despite his defeat in a case challenging birthright citizenship. But if we flip over to the Financial Times, they've been speaking to the NATO Secretary General Mark Rutte. He says that Europe's spending on arms orders is sustaining 195,000 US defence sector jobs as he makes the case for President Trump to remain committed to the alliance. And saying with defence, if we come to the UK now, the Times focusing on UK Prime Minister Keir Starmer's defence investment plan, which shows that Andy Burnham, his likely successor, will have to plug a near £5 billion funding gap at his first budget if indeed he becomes the country's next leader. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak, which as ever terminal subscribers can find by going to D8YB Go. Now let's turn back to Sintra because the Fed Chair Kevin Warsh is giving one of his first big international speeches later as he joins the ECB meeting in Portugal. With me to discuss is Sabrina Khanniche, Senior Economist over at Pictet Asset Management. So Sabrina, really good to have you back. Since Kevin Warsh is in Europe, let's start there with the Fed. Is the next move a cut despite all the hawkish messaging we've had so far?
Well, this is not what we expect. Actually, we expect the Fed to remain on hold until the end of the year. The market now sees a rate hike, given the hawkish comment made by Kevin Warsh, the focus on price stability. At the same time, when we look at the fundamentals and how the economy, the US economy is doing, also taking into account the neutral rate estimate of the Fed, we think that the Fed should remain on hold this year.
But it's the question of what happens after the hold. And we've got lots of data coming. We've already had lots of data on the jobs market. How hot of a payrolls print are you expecting tomorrow? And wouldn't a hot print raise the chance of a near-term hike?
Well, that's a very fair point. But actually, when we look at the US economy currently, so it's more of a K-shape. It's mostly driven by AI investment. But when you exclude AI, the underlying growth is pretty weak. Take private consumption, for instance. We had the Q1 GDP, which was revised up, but for bad reason. Because at the same time, private consumption has been revised down due to weaker disposable income. We can see that saving ratio also has slowed down. So there are obviously less buffer for private consumption, which has been resilient so far due to positive wealth effect. So we are obviously looking at the labor market. We know that the level that is consistent with the economy growing at potential has diminished given the reduction of the labor supply amid the migration policy. But this is what we look at, the evolution of domestic or households in the US that are doing less well.
I definitely want to come back to AI because that's a top theme at Sintra. It's meant to be the theme. But let's just also talk about the central banking story in Europe, because we've had pretty encouraging data when it comes to inflation from the biggest three economies in the Eurozone. And you've had that quite self-confident tone, right, from Christine Lagarde, knowing that they've already done their hike. Is that justified, do you think, that resilient messaging that she's been making?
Well, I think that the ECB has to remain cautious, true, so they delivered the first hike. We expect another rate hike in September because there are risks of second round effect, and this is what the ECB is paying attention to. If you look at the most recent sentiment indicators, they show, for instance, that both price and output pressures have eased, but price pressure have eased more than output prices. So meaning that companies want to protect their profit margins, and with demand doing pretty okay actually in the Eurozone, there is potential for companies to retain pricing power. And this is where the ECB has to pay attention, is the risk of the incurring inflation expectation leading to sticky services and core inflation.
So to be clear, it's more about the risk of second round effects, even though we're seeing progress maybe when it comes to the geopolitics and the peace talks.
Exactly.
Okay,
yeah.
so it's less about the oil story now, it's a domestic story now for Europe.
And I would say that now, given the easing geopolitical tension and with resilient domestic demand, it would add even more on domestic price pressures. Because you mentioned lower energy prices, so it will be reflected in energy prices with a negative contribution for oil prices, but we'll have to wait until March of next year to see those negative base effects with inflation returning to target. But for us, until the end of the year, we have inflation trading around 3%.
Okay, so perhaps we'll continue to get that cautious messaging from the ECB policymakers that Francine was referring to earlier. Let's go back to the AI theme then, because we don't have the most advanced AI models here in Europe, but I do wonder from a macro perspective how much the Eurozone economy can benefit from AI without owning those models.
Yeah, so first, it is about investment, because we know that investment in new technologies can stimulate innovation and boost productivity growth, and especially when those innovations are general purpose technology. And this is something that we see in the US. At the same time, there is a discrepancy between optimism about AI and low productivity growth. Here, I'm talking about total factor productivity, even in the US, which remains below long-term average and below the level reached at the end of the 90s and early 2000. So obviously in Europe there is this willingness to be autonomous in AI, not only AI but also defense and green tech. But it necessitates a lot of investment.
But from the inflation perspective then, do you separate it into two phases? It's inflationary in the investment stage, and then it eventually becomes deflationary when you wait for those productivity gains?
Yes, and even with higher productivity gains, it would lead to higher real interest rate, but for good reason, because of higher growth potential. But so far what is needed in Europe is those big investments. It was kick-started by the German fiscal policy, but halted with the war in the Middle East. But really, investment is needed.
And so, are job losses inevitable then? And which sectors do you think are the most vulnerable?
Well, that's difficult to say, but that's difficult to say.
Okay, well, I'm sure it'll come up again at Sintra. Thank you so much, Sabrina. It's great to see you. Sabrina Khanniche there, Senior Economist at Pictet Asset Management. Well, let's get more on those warnings from ECB officials that the shock inflation caused by the war in Iran isn't over yet. They include the Bank of Finland Governor Olli Rehn, who's been speaking to our very own Francine Lacroix in Sintra.
This energy shock has been clearly stagflationary, not like in the 1970s, that was a very deep stagflation, but its nature is of similar kind in the sense that at least in the short term inflation has increased while growth outlook has weakened. And at the same time one has to say that inflation dynamics has been not showing signs of expectations becoming de-anchored, or we have not seen major second round effects. And our intention is to keep it that way so that we stabilize inflation to 2% over the medium term.
Are you expecting a hike from here until the end of the year?
I'm not doing forward guidance, not in public or not even in my own head.
Okay.
I think it's important that we stick to the decisions we have taken, and this decision has been that we take decisions at each meeting. And the current outlook indeed has some stagflationary features, so that in the short term inflation has been higher and growth somewhat more subdued. My own personal view is that we'd better be prepared for a prolonged conflict, while we of course hope that the ceasefire will hold. So it seems that there will be plenty of geopolitical uncertainty in the air also going forward.
The ECB's Ollie Rehn there speaking to Bloomberg's Francine Lacroix. Well, Ireland takes over the presidency of the EU today. The position is key for setting the direction at leaders' summits, where major decisions, of course, get made. But Dublin faces a number of challenges, from how it handles tech policy to the future of defence. Let's get more now with Bloomberg's Brussels bureau chief, Suzanne Lynch. She joins us now. Suzanne, good morning. Just talk us through, first of all, what's going to be on Ireland's agenda under its presidency of the EU.
Yes, as you said, it's Ireland's turn in the chair here at the EU, where they're going to be chairing a lot of ministerial meetings. Some of the issues on the agenda, Ukraine, of course, and defence. President Zelensky, we're told, is going to be in Dublin today for the launch of the presidency, which will take place in Dublin Castle this afternoon. Ireland is hoping to make progress on Ukraine's membership bid and that whole enlargement of the EU. It's a strong supporter of that. The other big issue in its in-tray is the EU's long-term budget. It's known as the MFF, one of those EU acronyms, but it stands for the 7-year budget. And negotiations are starting on that, and they're going to be tough. A lot of divisions among member states about where the money should go and how big the pot should be. So that's going to be dominant. Also, the issue of competitiveness. A lot of files are coming through the EU system in terms of regulations, in terms of tech, in terms of the relationship with China, some made in Europe provisions, for example. All those kind of issues are in the in-tray over the next 6 months. So the job of Irish officials will be try to get progress, knock heads together between the EU figures across different files and make some progress by the end of the year.
I'm looking at a piece in The Guardian this morning, Suzanne, from Johnny Ryan. He works in civil liberties, and he argues that Irish ministers can't be trusted to chair vital European digital sovereignty talks when Ireland is dependent on the global giants that call Dublin home. I wonder how prevalent a view that is, how controversial Ireland's position on tech is, given this presidency.
Look, this is a very tricky, sensitive issue for Ireland, there's no doubt. The reality is that most of the US tech firms have their European headquarters in Dublin, and there is a huge amount of US tech investment that goes into Dublin, into Ireland more widely. So there have been accusations that, Ireland, has two masters here. It's trying to shepherd through EU legislation. So, for example, the digital omnibus bill will be coming. The tech sovereignty package that the EU has introduced. These are all issues that will come up during Ireland's presidency. And yet we do know that the government, the Irish economy is so close and integrated with US big tech. Now, the Irish officials say no problem. They say they see this role as neutral. They point out as well that during the last Irish presidency, back in 2013, it was a very different time then. Ireland was still in the economic bailout, but also the EU's GDPR regulation was going through the motions, and Ireland had to chair it then. So look, the argument is, you put your national interests aside, you try and get agreement. But look, it is undoubtedly the case that Ireland's close relationship with the tech companies will be under scrutiny.
OK, Suzanne, thank you very much. That's Bloomberg's Brussels bureau chief, Suzanne Lynch. Well, coming up, President Trump reports earning nearly $1.5 billion from crypto last year. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:47 a.m. here in London. Now let's take a look at President Donald Trump's finances, because he's reported earning at least $1.4 billion in 2025 from crypto and meme coin related businesses. This from his latest annual financial disclosure, and John Herskovitz has been diving into these numbers for us. So John, let's go to you now. Just talk us to what we've learned about the extent of Trump's investments here. I am asking myself, especially when it comes to crypto, how is this legal?
Yeah, that's another question, the ethics of this, which underlines this whole investment and the income. But the numbers are big. 1.4 billion at least from crypto, about 636 million from the company behind his meme coin. And if you put this into perspective, this is so much larger than the income from the whole of the Trump business empire. Mar-a-Lago was at about 77 million for income last year. Golf course in Northern Virginia, about 26 million. But crypto was the main source of income for Trump. And it's a huge part of his portfolio, especially when he has this vast empire that's spreading over many different parts of the economy. Crypto is where he's getting his money.
And also from foreign real estate earnings, it would seem. And I thought the family business had said that they weren't going to pursue new deals overseas because they didn't want to give the impression of conflicts of interest. What's the big picture that we should be taking away from the president's financial dealings, John?
Sure. We have two things at stake. One is, the ethics of this, the conflict of interest, the amount of money that's coming from the crypto overstate real estate deals, and whether this will be an issue that rings in the minds of voters for the November elections. The White House has said that there's no conflict of interest, that these are managed independently, sometimes automatically, but there's just a lot that's going on. There's a lot of stock trading in companies like NVIDIA, Microsoft, which have government oversight, and you have this problem, this question of ethics, whether this will actually be something that that really moves the needle in November. But the numbers are big, and it doesn't seem like they're getting any smaller. New York Times broke it down, said that since Trump returned to the White House, he's gotten at least $2.2 billion in income. They compared this to 2024. Let me just get the figure. In 2024, before the White House, the income for Trump was about $622 million. So a lot more money coming in after he's gotten back to the White House.
Yeah, the numbers are big, but I guess do voters care? We'll see in November. John, thank you for the update. That's Bloomberg's John Herskovitz. Now to some other top stories that we're following for you around the world this morning. The US Supreme Court has rejected President Trump's plan to restrict birthright citizenship, deeming it unconstitutional. The court says that Trump's executive order cannot be squared with the Constitution's 14th Amendment, which guarantees citizenship to almost everyone born on US soil. Trump suggested on social media that the issue could now be addressed in Congress through legislation. Elsewhere, Bloomberg has learned that a US congressional committee is investigating drug makers including Eli Lilly, Merck and Pfizer over their clinical trials in China. The panel wants information on trials at Chinese military medical centres and in Xinjiang, where Beijing faces accusations of targeting minorities. Lawmakers warned that the trials could expose US companies to ethical and national security risks. And here in Europe, Bloomberg has learned that Spain is set to grant residency permits to more than 1 million undocumented migrants. We're told that preliminary data shows more than 1.1 million people applied under an extraordinary regularisation programme before Tuesday's deadline, roughly double the initial projection. The permits cover migrants who were in Spain by the end of last year, can prove that they'd been in the country for 5 months and have no criminal record. Well, we've got plenty more coming up on Daybreak Europe, some charts to frame your day ahead. So don't go anywhere. Stay with us. This is Bloomberg.
Agentic commerce and trading both show that as AI capabilities increase, we must keep asking ourselves whether our existing tech-agnostic regulatory frameworks remain sufficient. Our frameworks were not built to contemplate autonomous agents.
Bank of England Deputy Governor Sarah Breeden speaking there. Now, as we enter the second half of the year, a new quarter, let's just take a moment to mark the market's homework in the first half of the year, shall we? I want to start off with US small caps. You've got the Russell 2000 here, and they surged to a record high. In fact, they added $315 billion in market value across the first half of the year. But that's not it. If you thought that was impressive, let's just take a look at chip stocks as well. We can bring up the Sachs index, which marks semiconductors. And in fact, this was the best quarter ever for the Sachs, up more than 100% in the first half of 2026. But let's take a look at one more asset here, and this is the dollar, because yes, we've seen a rally in the first half, as you can see here. But as the second half of the year gets underway, for this to continue, it's going to rely on increasingly fragile support from real rates. And now that you've got 2-year real yields above 2%, further gains really going to be harder to sustain. But all these three charts and the others that we use throughout Bloomberg TV throughout the day are all available for you. If you've got a terminal, go to CHRT TV Go. You can search, access and save them there. Now, let's take a look at the risk events on the agenda for today. In just a few minutes' time, we'll get the latest nationwide house price data out of the UK. We'll also get the ADP jobs numbers out of the US at midday and then at 2 p.m. This is the bit you've been waiting for. We've got a big panel in Sintra at the ECB forum. We'll be hearing from Kevin Warsh, Christine Lagarde, Andrew Bailey and Tiff Macklem on a panel there. So let's see what Kevin Warsh comes out as in his big appearance on the international stage here. We've got really excellent coverage coming for you. Continuing today from Sintra, Francine Lacroix is going to be speaking to guests including the Bundesbank president and the governor of the South African Reserve Bank. So do tune in for those interviews. The opening trade's coming up next, though, and Anna and Tom and Guy will be taking you all the way to the European Cash Open. So stay right there. This is Bloomberg.